It is, sorry. Good afternoon, everybody. And again, apologies for the slight delay and my technical incompetence to the beginning of the meeting. It is 1:27 and we will kick off today's Performance Audit and Risk Committee. In doing so, I'll open up by asking whether there are any apologies.
Through you, Mr. Chair, we have Deputy Mayor Hana Halele for absence and Councillor Blackler for late arrival. Thank you.
Thank you very much. Could I have somebody move that we accept that, please? Moved by Councillor Ryan, seconded by Councillor McCone. All those in favour? Against? Thank you. That's carried. We'll move on now to agenda item 2, declarations of interest. And can I ask, please, if there are any in the room? I'll take that as a no and move on now to agenda item 3, specifically 3.1, confirmation of the previous Performance Audit and Risk Committee meeting minutes held on the 24th of September. And I'll ask if anybody has any comments or feedback. Councillor Hopkins.
Yeah, Mr. Chair, I'm happily moved for 3 amendments. On page 9 of our agenda, at item 4.2, I query why, for the first time ever, we have 2 words in bold, in and for, both underlined. I don't believe either of them need to be. I think they should just be ordinary print. Page 12, item 5.4, second paragraph. Mr. Lyons also advised that while the previous meeting had discussed having a forward-looking procurement report, there was currently no contracts into the future. Was should be were. And also 2 paragraphs further on, Mr. Simon Neal asked whether the definition of standards in the roading space was the right one, given that more than 50% of the roading contracts had to be non-standard. They didn't have to be; they were non-standard. So with those changes, I'd move with confirmation of the minutes.
Moved by Councillor Hopkins, seconded by Councillor Ryan. All those in favour? Against? Thank you. Again, that's carried. We'll now move on to agenda item 4, and specifically 4.1, insurance renewal. I'm conscious that we don't have Ms. McIntosh with us today, and so Amanda, are you happy to speak to this, or?
Yep, I think we can basically take the report as read. I just wanted to note as well, since this report was published, we have received the new insurance premiums for the year. So there's some yellow highlights in a table within that report. So the new premiums are very similar to last year. There's no significant difference.
Thank you. And so if I just look at the report in general, I just have some comments to add at the start. I think it's comforting to see that finally that significant growth in premiums annually for the past several years has slowed somewhat. We're looking at around about $100,000 increase in premiums between 23-24 and 24-25. I note that of that, approximately 60,000 of this is the LAPP premium. And we've already been informed that that will increase by a similar amount the following year as well. So I think that's something for us to keep an eye on and to ensure that it still adds the value that we would want from it, although it's my understanding that we don't have much choice in as to whether we sign up for LAPP or not.
It's not something you stop.
No, it's not. But it's also not. It's also something. So, of that 100,000, around about 60,000 of that is LAPP. Around about 40,000 of that is the material damage and business interruption. And so, I guess it's comforting that the premiums on building and property, etc., haven't gone up significantly. And I note that we had $120,000 worth of claims for 2 community halls last year. So, I know that we're reviewing halls going forward. But this just shows the importance of having insurance in place while we do that. So with that kind of background commentary, I'll open it up to the floor for questions. Councillor Hopkins.
Yeah, I'm just apropos of the point you made about the not insubstantial increase in the LAPP costs. Page 16 says, Amanda, it had been anticipated that LAPP would wind down with the transfer of water's assets to the new entities. It has not been determined what will happen if water services are delivered as a CCO. So Is it, well, okay, they've said we have to pay 30% more this year and 30% next. Is it going to wind down after that? How definite is it that LAP would wind down? Picking up on Simon's point, can we bail anyway? What's afoot there, basically? Can we have a bit more information?
I don't have too much more information other than that. I'm not sure exactly when it's proposed to wind down, but it's not something we've obviously invested quite a lot into it so far. It's not something you'd want to just stop.
Yeah, I think we've put to Amanda's point, we've put a fair bit of money in the savings account now. It would be unwise to pull out when we still have all of the water assets sitting there. So I'm happy to have a look some further into that. But you're right, 30% increases year on year are not something that you'd have the appetite for on an ongoing basis. Are there any further questions, Councillor McKone?
It's just a question more than a thing. So I see Aon does the insurance. Does that go for quote every year, or is because there's more that, or does Aon do us a special commercial deal as opposed to the Joe Public? I suppose the question I'm asking.
I think we have a 3-year contract with Aon.
Yeah.
We go to the market every 3 years.
Councillor Ryan.
I guess given that we're trying to find savings in every sort of turning over every stone, like has there been any analysis on like our least critical assets, or in sort of like accepting different risks in that space?
Yes. So look, I unfortunately, Ms. McIntosh isn't with us today, but I know that they went through quite an extensive process of looking at where we could potentially self-insure some of the properties that we had, areas where we could perhaps increase the excess that we were prepared to take on board. And I think with the review that's happening over the course of the next 12 months or so around assets and asset retention, etc., there'll be a further review of that. But of course, for every the unfortunate thing at the moment is that for every form of insurance or insurable product that we have that we try and off, something like cybersecurity comes up and increases in terms of the significance and the premiums that are associated with it as well. Yeah, well, I'm not surprised, am you, after some of the cybersecurity instances that we've seen globally over the course of the past year or so. So, I mean, the short answer is yes. They do a pretty thorough review of it and will continue to do so. And I know that Amanda and Paul and I have had quite a bit of feedback into how that's going. So I'm pretty confident that they're doing their best to keep it down low. Thank you. I'll just note regards to Councillor Blackler's return. Thank you. Welcome. Any further questions around our insurance discussion? No. If not, could I ask somebody move that we accept it, please? Moved by Councillor McKone, seconded by Councillor Ryan. All those in favour? Against? Thank you. That's carried. We'll move now on to agenda item 5.1, the Treasury report to September 30. And Amanda, I will hand this over to you to socialise.
Okay, so this is a report on our Treasury function for the first quarter of the financial year, July, August, September. We're in a pretty stable position and we actually look quite healthy, mainly because of our total borrowings against budget is a lot less than we expected. Our interest, we are earning a higher interest rate on our loans to external entities than we're paying on our loan borrowing on the other side from our GFA. And yeah, everything else is in a pretty steady position. I don't have any more information about potential repayments in terms of our loans and advances. We'll let you know when we hear.
Thank you. So look, just to open up the discussion, if I look at the table on the page, on the top of page 39, you can see up there that we're around about 2 million shy on expected term deposits for this point in time. My assumption around that is that it's just been very difficult to understand and forecast cash flows, and where we'd originally thought that we might have had something there. We don't currently. The loans to other entities, we've got that additional 1.6 odd out to Observatory Village. And so I'm comfortable with that for the time being as well. But I guess for me, as you alluded to at the start, right now we're tracking around about $27 million lower in terms of the debt that we had forecast than we currently are. And if we get some repayments that we weren't expecting, does that mean we'll be even, I guess, have even less borrowing than what we're expecting now? And then the final piece of that is there an expectation that that borrowing will no longer be required, or will we just be, is it forecast that we're going to be punching it into next year and kicking it down the road a little bit?
A few questions there. So in terms of cash, we're just trying to maintain the perfect balance between not holding too much in term deposits when we're paying interest borrowing from it as well. So we're trying to keep our borrowings as low as possible. But yeah, making sure that we have enough cash on hand for when those big chunky capital payments come through. So we're working well with the departments to try and forecast more into the long term and get the right balance between our cash holdings there. In terms of our external borrowings, we definitely will not meet the $99 million budget by 30 June. It's expected that that will be lower. Can't tell you exactly how much. Obviously, it's due to timing of CapEx projects that we're under budget right now, and we're just working through, there's a lot behind time getting tenders and that sort of thing. So over the next couple of months, we'll be a bit more certain about when those projects will happen. And as I mentioned,
But it's more a deferral than any kind of long-term saving that we're talking there.
Yeah, probably more deferral. It's more of a conversation we will have next month. We're going to bring forward the carry forwards budget. We will outline, the council made a resolution a couple of months ago to include the carry forward projects from 24 into the 25 financial year, 14.5 million. And we're going to come back next month and identify projects that will not be complete, potentially not be completed in the 25 financial year. Whether that means they are not happening at all or are deferred into the 26 financial year, we'll have that conversation next month.
Okay, thank you, Councillor Mackay.
Yeah, so I take it from that, there's no allowance made if we do get things paid back, and if we do, that's a bonus. We'll almost halve our deficit. Taking that something. Secondly, the loans that we have, be it 1 year, 2 year, or anything else, are they a fixed term of interest? So what I'm getting at is, by the time we pay them back, and the interest rate could be down 2 or 3%, we still may be paying 6%. Is that what I read it?
So you can see on page 42, the variety of loans we've got. They're all typically 1, 2, 3 million. So they're spread out a lot at different interest rates. So yeah, you can see what ones there's the floating rate notes and the fixed rates. There's a bit of a variety. Most of them are, about half and half probably numbers wise. Yeah, it's a bit of a mixture.
Yeah, so I note under the borrowing forecast on page 43, we're talking about the potential $16 million early repayment by Observatory Village, should it eventuate, would enable the council to repay the debt that's maturing in November, December. It refers though on page 43 to debt maturing of 13.5 million, but if I look on the table on page 42, it's 8.5 million. Am I missing 5 million of maturing debt somewhere? I am.
There should be. So there's the 2 and the 6.5 up top. Is there not another?
No. So we just might need to chase that up and make sure that that table's up to date. I checked and it does reflect exactly the table that's sitting in the Bancorp report. But I think that's something that we'll probably just want to have a look at.
Yep.
In any case, if there's a difference in maturity, then you'd look to invest the difference and get a better yield for that in the interim as well. Sorry, I was trying to point that out while we were on there. Any other questions or comments? Councillor Hopkins.
Yeah, 3 things. Page 41, Amanda, can we have more? The advice we're given about the Wayland Lodge Trust. We've now lent them 1.3 million apparently. But the 1, 2, 3, 4, 5th bullet point says the second loan is being serviced from rates. Now, my understanding when that matter came to us and we voted on it was that the council accepted that there might be a ring fence rates contribution, but not that the totality of the loan would be paid by the rates. The lodge and the trust were expected to make some repayment or contribution to that second loan. That's my recollection. So that's question number one. Number two,
We wrap question number one up first then. so
Oh, okay.
Close that out.
okay, that's fine. My recollection was that the ward rate would pay a part.
We can find out where that was from.
That's fine. Okay.
Sorry, and your second question, councillor Hopkins?
Second question, on page 43 of the agenda, purpose and timing of LGFA borrowing, May 2023 capital expenditure, July same year capital expenditure, October capital expenditure. Everything else is identified. We can know exactly what the money's been borrowed for. I'm just wondering what those three headings actually mean, and are we satisfied that that's enough by way of explanation?
We can provide more detail. It's probably a mixture of various types of capital expenditure projects.
My third and final question, on page 48 of the agenda, on the dashboard, under policy compliance, we've got is liquidity within policy control limits. And it's the only thing that's red flag, or at least I read that as a red flag. Is that, I mean,
Correct. So that was.
how big a concern is that?
Yeah, so that was something I was going to bring up. But so just to close it out, what we'll do is that we'll look to provide some more detail around that May, July, October CapEx generic reference on page 43. Okay, we'll look to find some more detail around the Wayland Lodge rates funding. And your final question, which is a question that I also had that I spoke to Amanda about earlier, was Bancorp reports showing us on page number 48 that that our liquidity ratio is not within the policy control limits. And then I think you can see on the right hand side there's a box down there that shows that. Amanda, as we talked about before, you're happy to discuss this today and the significance or lack thereof of that.
Yeah, so this is what I talked about before with our cash flow. So it's just making sure that we have enough liquid cash on hand to offset, so at the right level for their measures. So at that point in time, at the end of the month when that measure is taken, we didn't have enough cash on hand to meet that requirement. So it's kind of a timing thing. We're just delicately balancing our cash holdings at the moment, making sure that we're not holding extra cash unnecessarily when it could be paying down debt.
So we're relatively confident that we're back within the policy now, or if not, we will be soon, and that it's primarily a result of point in time. If we look at that ratio and the requirement to be within policy of that ratio on an annual basis, we're comfortable that we achieve that. But because under our direction, in fact, specifically under my direction, we're being much
Mm.
more conscientious about not holding too much cash on hand while we're then going out and borrowing a whole lot of money. That means that there will be increased periods of time where we briefly breach the policy because of how tightly we're holding the purse strings.
Yeah, definitely. Yeah, so it's something that we definitely don't want to breach at year end, 30 June, when we report publicly as things. And also this December is going to be a significant month as well, a lot of changing over, re-rolling, refinancing debt. So it'll be specifically considered then.
So maybe we just keep a pretty tight eye on that and look at just getting even if we just got to look at it over a period of time, just to provide the members of the risk committee with comfort that overall we were there, but there were potentially months where we weren't. I think that would be a useful thing to bring along to the next. Councillor McKone.
Look, just to go back a bit, Amanda, just could we have a wee bit more clarification on page 43? Right at the top, you've got July 21 as water reservoir and desludge. I'm assuming the bulk of that was the reservoir. Otherwise, I'm wondering why we're actually having to budget now to desludge more ponds, is the first part of that. And the second part, November 23 and April 24, for the project reclaim, that's 21 million. And I thought we were short of a budget of 17 in total.
Yeah, so that whole table, I can give you a lot more detail, specifics around what projects, but yeah, definitely the project reclaim claim happened over a number of months, over the last 6 months, nowhere near 10 million in that period. Probably the bulk of it would have been waters projects. But I can.
Yeah, and I think we can see there too that we've got CapEx, project reclaim brought forward. So it's a combination of reclaim and other CapEx sitting in there. But my understanding is, and I've asked for an update from Mr. Clark on project reclaim, which I'll share with everybody as soon as I get it, that is actually trucking along pretty well and is certainly not over budget, even though there's been significantly more waste had to be removed than was originally forecast. And obviously just referring back to your earlier ones around the July 21, 22, etc., that would have been debt that was taken out for a 2, 3, 4 year period to hit the sweet point of the debt curve. That finance is still putting it here to show us that when we get the total of 72, that it's made up of some things that we've done, previously. Thank you. Are there any further questions on the Treasury report before we move on? If not, could I please ask somebody to move that we accept it? Moved by Mayor Kircher, seconded by Councillor Hopkins. Thank you. All those in favour? Against? Thank you. That's carried. We'll now move on to 5.2, which is a continuation of our numbers. 5.2, the financial report for quarter F1 2025. And again, Amanda, I'll invite you to speak to this.
Okay, so this is the result for the first 3 months of the 25 financial year. We are behind budget. We planned to be 5.888K deficit, and we are a 6.632K deficit. So that's 744% or 744K or 12.5%. This is mainly due to timing differences. So you can see the revenue significantly behind due to not timing differences in receiving external funding, mainly for the Sports and Event Centre and Forrester Gallery. It's just we expect to receive that grant funding and we spread it out as best we can when we think that the project's going to happen. But if the project doesn't happen at that time, then we can't receive the funding until we've actually done the work. So that is the main reason for the variance there. Expenditure is 0.9% under budget, which is positive. And then the balance sheet, as I just mentioned in the previous paper, the difference is largely in borrowings behind budget. It's very difficult to budget when our CapEx projects are going to happen. So when the capital work is behind due to like the Sports and Event Centre, that means that our timing of borrowings is behind as well. But we expect we will not reach the 99 million predicted at 30 June 2025, but unsure.
And you'll bring back some more detail around that in the meeting next month. I note also that we've got about a $14 million difference in the revaluation reserves, but I'm assuming that's just a timing of year thing and that we don't get those revaluations until year end. So that variance is likely to sit there until then and come live. The only other question that I had, because we've got some really good commentary around other differences, was, on page 54, under the revenue and expenses, we're about 50% under there or thereabout in development and RMA contributions. And while it's only $188,000, it is a 50% difference. I wondered whether there was any more colour that we could add on that.
A couple of our big entities incurring development contributions have set up payment plans for like Amarama Airfield
Okay.
has now got a loan in place. So that changes the timing of when we receive the funding. So that's probably the main reason there.
Okay, so again, there's that expectation that as the year progresses, what we're receiving will become more aligned with budget. So for me, that's just a watch this space placeholder. Mayor Kircher.
Is there a way to reflect that, or is it just going to be something you could add in the, you know, how much is outstanding that is expected to come in? But I mean, we have our budget of what we think will come in, but this is stuff that will come in.
Yeah, in terms of those ones that have repayment plans, we could give more detail around that. But yeah, our budgets typically, like for things like development contributions, would just take the overall amount we expect for the year and divide it by 12. So don't put too much weight on the budget in the first place. But yeah, definitely like Amarama Airfield, we can give you more detail about the payment, how that's happening against budget.
Councillor Blackler.
So when the development contributions are set or decided and a payment plan is put in place, in terms of recording for accounting purposes, it's basically when as each payment falls, it goes into this revenue line item here, or just to Mayor Kirch's point, is there a way of better reflecting? Yeah, I don't quite know what I'm asking.
I get it, but
do you get what I'm saying?
So I think to Amanda's point before, when we forecast at the start, we forecast for 12 months and then we just basically divide it up and put it into the 12 into 12 equal buckets. You're saying if we know that there's going to be a change in the nature of those buckets and how they're filled, is there a way for us to reflect that in the budget and the updates?
Well, yeah, I guess
if we know it's going to be lumpy, can we read the budget to be?
When we struck the budget, did we know that Omarama Airfield was like, did we just take like the historical average of development contributions, or okay, so that anomaly, if you like, hasn't been accounted for in our for budgeting? Yeah, right.
And I guess when we if we start to be able to have a more dynamic understanding of the way that our material revenue or our costs are going to be coming through, then I'm sure that we'll start to reflect that with the updated and better cash flow models. I almost regret bringing up such an immaterial number in the great scheme of things now, but you know, I wouldn't want to ask the finance team to start forecasting at a really dynamic level down to that level of cash, but I would when things were higher. And I think for me, if we were able to, you know, provide that explanation so that I didn't ask the question and start the conversation again, that would be quite useful. Does that help at all?
Yeah. My question wasn't trying to interrogate the 188,000. It was more to understand the full process. Yeah. Thank you.
I think it's become a lot more scientific over the past 12 months and will continue to become more scientific as Amanda and the team get their tools on board and transformation starts to deliver. Any further questions on this one? Councillor Hopkins.
Yeah, look, acknowledging that it is only the first quarter and that you make the point in the report that more progress is anticipated over the balance of the year, it's still consistently the expenditure budgets are below budget, not above. Well, we've got parks slightly higher, they've got 5.7% above, but roading less than 40, 44% down, water 31. Now you say that that's a Kakanui Bridge design and other matters like that, but it does seem to me that there may be something systemic here. IT meant to spend 454 and only spends 266. I'm not saying, hey, you have to spend up, but clearly people wanted to do things and achieve outcomes within a time frame, and none of those outcomes have been achieved. Well, fewer of those outcomes have been achieved within the time frame than were anticipated and desired. And it appears to be systemic, as I say. So, is there a comment? Is it systemic? I mean, Paul and others have said at different times, we are biting off more than we can chew. We are trying to do more than we should. I mean, is this actually, once again, evidence that that's the situation, that we're just overreaching ourselves?
We can talk about it further next month when we go into the water and roading specific budgets, capital projects and things. But I think the main ones, timing differences with the big one-off projects like the Sports and Event Centre and Forester Gallery, that's just timing, and it will happen this financial year as planned. I guess water and roading is quite like we kind of work on an annual process as well. So the annual plan's approved in June, you sort your carry forwards in July, and then it's just timing. They're out for tender and that sort of thing. So it's just yeah, there's a few delays there, but we can hear specific projects later on why things have been delayed, whether they're still happening as intended, and how much is actually going to carry forward into the next financial year.
I think that's a really, really valid question. If we look at that table and we see there's just so many pieces on there that are 20, 30, 40% out of whack. But again, to reiterate the point that you made earlier, this is the end of Q1. These things are lumpy. They take a bit of time. And so if we look at this at the end of the next quarter and it's still looking like that, then I think that's a really valid thing for us to look into further detail on. Thank you. Thank you. Any further questions? Excellent. Could I please have somebody move that we accept the financial update? Moved by Councillor McCone, seconded by Councillor Hopkins. All those in favour? Against? Thank you. That's carried. I'd now like to move on to agenda item 6 and the resolution to exclude public. Could I have someone move that we please move into that? Moved by Councillor McCone, seconded by Councillor Blackler. All those in favour? Thank you. We'll now move into public excluded. So we'll just give a couple of minutes of production time for that to get set up.